I thought you were speaking about something on the high time frame. What's gonna start? The stream. Okay. Feels like it's been a while, boys. It's only been a week though since I last streamed. All right. So this is the daily chart on Biddy. As you can see, the beautiful 89k level didn't actually hold. It held for a little bit, and then eventually price came through it. So the goal now is to get back above it. Obviously, we have a lot more to do than just that, but that's a good starting spot. I want to see a little bit more data develop in this void, because now that we are sort of in this pocket, the price action is going to be a little bit more random. I am surprised that we're getting a pretty consistent pump coming in, all things considered, but the market doesn't just go straight down. So let's see if we can reclaim 89, and then if we can, we'll see how far we can go. Ideally, want to see some sort of engulfing. Engulfing meaning, you know, how many candles did it take us to go from the high to the low, and how many candles did it take to retrace that. So usually shows some sort of momentum shift. We don't need that, but obviously it would be nice for the bullish argument. So if we can retake 89, then we'll look to see what happens here. If it ends up holding, then we can really get the ball rolling to the other side. As it stands though, still guys, I'm still going to be really conditional on these pumps on Bitcoin. You know, some sort of relief rally is likely due to happen soon. But as far as will that relief rally have legs to it, that's where I'm still going to remain skeptical. Of course, I wouldn't mind if it had legs to it. I'd love to see Bitcoin pump, but I'm still going to be pretty stringent and conditional on all these pumps. If I start to see bear structure form on the more local, you know, and maybe we see another imbalance of supply and demand, then I'm going to end up flipping slightly more neutral than just being a bull. Now, the fact that we haven't dipped under these lows that we created in April, approximately 74k, is really good. We had a lot of room to breathe here. And what I mean by saying that is the distance between where previous liquidity got cleared out at the beginning of the year versus the new lows that we found in April. Basically the distance between these two lows is pretty wide relative to the movements that we've seen in the past, right? So that's a good sign. It means we have room to breathe. It also means that while we did dip pretty deep into the void here, it did get pretty messy. I wouldn't consider these equal lows. So when we look at these two lows and the distance between them, based off the relative movement we've seen in the past, or how much volatility there was in the past, there's obviously going to be some invalidations and stop losses that were printed when we found this low on Friday, and then some invalidations down here. Mostly everything in the range has been tagged out, including this. So it is kind of close to being considered what you could call an equal low, but based off the relative volatility in the past, and because there's so much breathing room, I wouldn't consider it an equal low just yet. Doesn't mean it can't eventually, you know, form that. If we do make another low, that'll likely be the case. You know, we do have some room on the RSI as well to form some sort of bull div. There will be a decent amount of data in between the bull div, but as far as daily bull divs are concerned, you can be a little bit more generous with the amount of data that's printed in between compared to like a 4-hour. So if we keep forming a range here, then the bull div is off the table. If we go for a new insignificant lower low quickly, then the bull div is still on the table. And it gets really close, but there is still some room to breathe before we would create equal lows. So I imagine we're going to see some kind of short squeeze. Usually you don't go straight down. There are instances of it happening, certainly in crypto over the years. But we ran into a lot of fucking icebergs here, boys. I mean, look at that. Icebergs had set up shop. We did end up finding a bottom after going through a fuck ton of them on the bottom side. We still have a lot of them kind of sparsely laid out since that bottom was formed. And, you know, I'm not too confident on any one of these icebergs on the bottom side because we haven't been seeing a decent amount of, you know, conviction behind them. What I mean by that is, now how long have they been sitting in the book? Are they flashing in the book? Like you can see on this one, for instance, there was times where it was lifted I don't want to see the iceberg get lifted at all. I just wanted to see it be stagnant for a good amount of time to have more, you know, confidence in them. But like I said, we did run into a lot of demand here, and it ended up catching the price quite nicely so far. As it stands, though, we still have a lot of short sellers in the market. They are starting to cluster together, and we're seeing more aggressive short selling coming in. The reason why I call it aggressive is because, you know, there's ebbs and flows to the market. Usually you don't go straight down, just like you don't go straight up. The fact that we haven't really seen that nice of a rally, I mean, this one that we're printing right now isn't too bad. We obviously still have to regain the daily, which they're fighting for at this moment. But the fact that we haven't seen any really short squeeze come out of the market means that shorts are getting more and more exuberant. So we'll likely see a punish of some sort at some point in time. Just like, you know, when we go up, there's usually some sort of pullback before we can go higher. Same thing, there's usually some sort of bounce before we go lower. So the only play I see right now is to long it, but of course, just like the previous times that I mentioned that the only play was to long it, it's not really that great of a long, at least not yet, until the market proves more to us. Zooming in on the more local structure on Bitcoin, Tom did mention this, at the hold around 85, and now we're holding at the second spot, which is important. So the structure is doing well so far, but because we've already tested a lot of the structure, we don't really want to go back and retest it, right? So as you can see, both of these have already been tested. The local one was a bit of a front run. So just looking at the previous lows here, this one obviously never got tested just yet. The fuck is this link? Fartcoin? Is it a Telegram link to Fartcoin? Bro, don't come in here fucking shilling Telegram links to your Fartcoin community. You guys can't see it, but Nightbot kicked out the link. Anyways, these are the previous lows. Like I said, this one never got tested. This one did get tested, and then the next sort of order to hold on the structure would be this one. It's good that both of those have been tested and held, but now it means that if we return to them, then structure is going to break down. Ban him? Let me see how long he's been following for. Oh yeah, you're a recent follower. You guys, mods, you can ban him if you want. Is 85K considered equal lows? Oh, like these? Yeah, this is still technically equal lows, but it's more on a local structure, so it's not as pressing. It's not as pressing as like a high time frame equal low. Anyways, the next area we need to hold after this would technically be here, but there is some argument to be holding this one as well. When we look at this structure on its own, we have kind of asking for a lot to hold on the next structure. So that's why I'm so conditional on these kind of pumps on Bitcoin, because, you know, this is solid. We haven't seen the kind of structure hold this solid on the hourly for a while, but it also means that returning to it could break it. Even let's say that we do return here and we get some sort of bounce. Now we've got more equal lows, right? Paired with the fact that the structure cracked a bit. So we need a pump. If we do get a dump in the next hour or so, it's technically okay as long as we hold now the local structure, because all the high time frame stuff's pretty much done. So it would be here. It's kind of a scary number, 86,666. But yeah, so if we do get a dump, we would need to hold it here. So potential area for longs, because if this long doesn't work out, then the whole structure breaks and we could come down and test this, or we get a low lower than this low. Both of those are on the table if it breaks here. As far as shorts are concerned, there's some good news for the bulls. It's in the same boat where we have pretty much the tests on the structure on the other side of the market. So it's good and it's bad. The fact that it's already been done is good. The fact that there was pretty good fluidity there is bad. I guess bad and good relative to if you're bullish or bearish. It's technically bad for the bears, slightly good for the bulls. So now that everything has been tested for the most part, we should see either consolidation or a big move. And the longer we spend in consolidation, the bigger the move. So as you can see, we're sort of making these lower highs and higher lows, which means that market participants are starting to stack up in the same invalidations. The invalidations are getting tighter. whether that's new positions being opened or older positions that are moving their invalidations deeper into profit. This starts to create consolidation to some extent, and then we should see a big move that follows after. I'm leaning towards it'll likely be a big move to the top side at this point, just because, like I said, we need to see some sort of squeeze on the short sellers. If we don't, I mean, the spot market just has overwhelming control, because most of the time you are going to squeeze out some short sellers before you end up going lower. But like I said last stream, we still have pretty weak bearish structure on the top side with all these equal highs that have been formed. So if we start to see, you know, dumps that happen from these highs, it's actually a good thing, because it means that all these invalidations never got tagged out, and all the new invalidations that are opening here will be sharing the same spot as them. We've seen these equal highs and equal lows held pretty consistently for the last couple years, so I wouldn't be too surprised if that's where we start to run into some turbulence. But that's a good spot to run into turbulence, because, like I said, it would stack up all the new short sellers with the same older short seller positions from about a week ago. So we'll keep an eye on it, but yeah, the only play I see today is to try and go long. Again, it's not the best trade, because there's no guarantee that it's going to have legs to it. I mean, there's never a guarantee, but the probability that it's going to have legs to go the distance is certainly lower than in previous market conditions, at least earlier this year. As far as short selling though, I mean, you can get a little bit cheeky with it, right? You could look for a new high, look for an imbalance there, because there is a decent amount of liquidity resting up there, up at 89. So clearing out the 89 last second short sellers and seeing some sort of imbalance of supply and demand. But because this isn't a high time frame move, I don't think the short sell is going to have much legs to it. So actually, you know, the long technically does have, at least the more local stuff, the long has more room to run than the short. We need to go a bit higher for the high time frame shorts to start looking like they're going to have more legs to it. So if you're looking for like a bigger hedge position that you want to hold for a longer period of time, you have to wait for this price to kick up a bit more. If you just want to get aggressive with it and you're looking to sort of scalp it and look to short it on a scalp, then you could look for a new high. Because when we make a new high, you got to ask yourself a question, right? Say we make a high higher than this high, right? If we see this, then there's no short opportunity. But if we see sort of a lackluster high, then we have to ask ourselves, okay, why was it lackluster? That's usually just showing you another example of the true supply and demand in the books. I actually think it's more likely that this will happen, where we'll actually get a real pop to squeeze out a lot of these last second short sellers. But in the event that what I believe is more likely to happen doesn't happen, it could be an opportunity to look to grab a short scalp. Again, I don't think the short scalp is that good though. It gets better as we go higher. Let me read the chat. What's up, Simplic? Welcome. Never trading an SR flip. Figured it was hard to place stop loss. It's pretty cool though. Yeah, I mean, the SR flips, you don't need to necessarily trade them, or RS flips. Basically what that means, to keep it simple, guys, like if you want to see it in the chart right here. This was the support, right, until the bottom sort of fell out. And then this is now seen as the resistance. So support, turn resistance, SR, flip. Has been held so far, but it's still kind of a low time frame one. And then, like you pointed it out in the chat, Tom, how do you, where do you put a stop loss if you're trading that? It's mainly to see fluidity, like who's in control. So it's more of a tool to look at the chart to see, you know, which side has more strength. Not necessarily a good area to take a trade. Some people swear by it, but I've watched it throughout the years, and it's not very consistent, paired with the fact that, you know, you could get invalidated a couple times before it comes to fruition, and even if it does, you know, will it have legs to it? If it's a really high time frame one, it certainly could, but this one's pretty low time frame, so it's not that much of a pressing issue. What would be your support level of breaking down? Well, everything's already tested. So this is already tested, this is already tested here and here. So we can't return to that. The one thing we could do is return to the local, which is unfortunately 86,666, which is a spooky number. But that's about as much room as I'd like to give it. If we need to do that, test here. But other than that, I mean, we could find something all the way down here maybe. But if we return to these levels, we could certainly just wipe out everything in this void. And then even if we do hold it down here, as you guys know, it would look something similar to like an equal low, which would create fragile bullish structure at the bottom. How come stream is at this time? I was a little bit busy, so I was like a half hour late to stream. Alright, I'll keep talking about Bitcoin in a little bit, but this will all be posted, so if you missed the beginning part of the stream, you'll be able to watch it again. I'll leave Bitcoin up on the low time frame while we talk about some other stuff, because where we're sitting right now on Bitcoin, just like we were the past couple weeks, it's in the hands of the S&P right now. Oops. So still pretty heavily reliant on the S&P market sentiment to sort of carry Bitcoin along. Now, there's some good news on the S&P and there's some bad news. So we're looking at the American stock market now on the right. I'll make it a little bit bigger. Leave Bitcoin on the left on the low time frame. Okay. So the good news is we took out a huge chunk of equal lows, and the price did not fall off a cliff. So when you look at the stock market here, you know, we've been forming these equal lows pretty much since late September. So all the market participants are looking at this area, at least the active market participants, and viewing it as support. When that support breaks, obviously we're going to get a lot of selling that came in, and you can sort of see it on the volume here as well. So selling slammed the market pretty hard. And why didn't the price go deeper? So usually if a bunch of people are selling at the same time, you would assume that the price would go, you know, it would dump quite significantly, or at least more significantly than that. That looks pretty shallow relative to the previous movements in the past, right? So that's some silver lining. It doesn't negate the fact that we have other scenarios where there are equal lows that have been left behind, right? But the fact that we only had to take out, you know, the first set of them and saw that insignificant lower low is a good sign. There's also equal highs on the other side of the market that we're teeing up to potentially take out as well. It'll probably happen. If it's going to happen, it's probably more likely it'll happen later in the week. But if it does happen sooner than later, I'd be very impressed. So there's some, yeah, there's some equal highs on the other side of the market. And most of the fluidity on the other side of the market's done for the bears. So it was a little bit sloppy on the bearish side, but you know, with all that fragile market structure at the bottom, it's not a huge surprise that we ended up taking that out. So a lot of the futures positions that were more aggressive on the long side did get kind of fucked last week. And the result was not the market taking a nosedive, so that's a great sign. So it mostly looks good on just the S&P chart. The more concerning thing, like this chart alone looks good right now. It looks good that we can go make another all-time high. The thing that doesn't look quite as good is the volatility index. So we are dumping on the volatility index, which is good, right? Because obviously if the VIX, if this number's red, it's likely that all the assets are green. But what I didn't like to see was the stacked equal highs. We didn't see that good of fluidity on the top side of the market. It got pretty fucking messy here. As a result, a lot of things got kind of smashed hard over the weekend and later last week, at least for the legacy market. So it's good that it's going down, but we did leave behind sort of fragile structure at the top, which is quite a concern. The good news is we're cracking the bottom side structure. So structure on the bottom side is starting to break a bit, which is a good sign, but we still did leave this behind. So if the structure on the bottom side cracks, it means that we're likely due for, you know, pretty long bullish time on most assets, but it doesn't leave behind, it doesn't, you know, negate the fact that this is what was left behind. So we're challenging the bottom side structure right now. I don't see that. How do you mean cracking? I'll show it to you. So this was tested. It gets this is going to be kind of hard. See if you can follow with me here. All right, so we take it from the bottom, right? So this was held at the bottom, or the lows. It was a little bit messy, but it was good enough. And then we look for the next ones, which is here. Okay, that was held good. And then here, that was held good. So that shows fluidity on the bottom side of the market. So these were held. The next one, you can sort of, it's kind of hard to see it because there wasn't a huge amount of time that we spent there, but the next one was here. It got kind of sloppy here, but it did eventually hold and pump. And now that we've revisited previous areas on the structure, it shows signs of cracking. So, I mean, you could argue that the upward movement on the VIX, the structure is now cracked because we returned to it. Not only did we return to it, but we're now failing underneath it. So it means that there's a chance that we can get a low. I don't know how it's going to look on the way down, but there's a chance that we can get a low lower than 15 on the VIX. If that's the case, then obviously Bitcoin will have seen a pretty good recovery. So if we go below 15 on the VIX, it's likely that Bitcoin has regained 89K at that point. And then we could eventually challenge these kind of structures down here that have already been done as well. So the whole thing, like on the bottom side, looks like it's getting damaged, which is good for all the assets, like I keep saying. Remember, if this chart's going down, it's likely that everything's going up. So the fact that the bottom side structure has been cracked means that there's a good chance that everything could go up. But the warning sign that I'm saying is this still happened. This still, even though it looks good right now, it doesn't take away from the fact that that still happened. So it is fragile up there, but it's one of those scenarios that maybe we don't have to test the fragility of it anytime in the near future. However, we should still consider in the back of our head that, you know, at some point it's likely that we will end up testing this. I'm going to mark out the level on the low time frame so that you guys can see it. So retest here. Did see a front run of it, so we could dive into it. Okay, let me mark it out like this. We don't have to go lower, but if we do, then the opportunity would look something like this, right? Can I show you what I mean? Yeah, let me see your VIX chart, Timothy. Yeah, no, don't get me wrong. The higher time frame stuff on the VIX looks quite bad. But as far as the structure that we built over the last month, it's getting damaged right now. Now, if we're talking about the structure that we've built over the last couple quarters, yeah, it still looks pretty bad. For bad as in it looks bullish. And bullish on VIX is bearish for everything else. Now remember, the reason why I spent so much time so far talking about this chart in particular is because it kind of is it's the roadmap for all the other charts. If you can get a good idea of what's happening here, you can pretty much get a good idea of what's happening on the rest of the markets, depending on what your preferred market is, whether it's precious metals, crypto, stonks. How come VIX bullish is bearish for everything else? Because the VIX is just showing you the volatility. If historically in the markets, at least on the legacy markets, this isn't as applicable for crypto, but I'll explain in a second. So if historically volatility, if it's high, it means that the markets are dumping. Usually volatility is associated as a bearish word for the legacy markets, even though it's not technically, volatility is not only associated to a downward move. It typically is for the legacy markets. Like in crypto, volatility could be upward moves too, but you don't see that as much in the stonk market. And there's a variety of reasons. I can go into detail and explain why that's the case if you guys care to, but you know, some people don't really give a fuck. They just want to know the relationships. And like I said, this could be a long tangent. I'll try and make it as short and sweet as I can. Because most asset holders are passive, meaning they just kind of buy it and they hold it. You know, like think about like retirement and stuff like that. They just buy and hold. It means that the prices, because everybody's just holding, it means that we can get the prices really high, right? Because there's not that much seller pressure. But after the prices get quote unquote high, right? Because what is high? But after they get high, then it's much harder to maintain them where they're at, even with the fact that most market participants are passive, like I said. Um, even the active market participants can have significant effects on the volatility. So if most people are passive and hold, price goes up a lot. Once price goes up a lot, it's easier for the people that don't just buy and hold to have more of an effect on the price going down. And why is this important for every asset? It's because of how a lot of market making and liquidity provision, those models are built around the S&P 500, because the S&P 500 is the biggest market cap outside of like currencies. But as far as assets are concerned, the S&P is sort of the big boy, right? So, if somebody is selling their fucking stock holdings, it's likely that they're going to be selling their Bitcoin holdings or more alpha risk, right? So when you look at like what is more risky to hold, or at least what people believe is more risky to hold, it's going to be individual equities like a common stock of any particular company. It's going to be, crypto. It's going to also be gold, and these are known as more of the alpha risk, whereas your betas are more of like your bonds and corporate junk bonds and that kind of stuff, which are historically seen as safer investments. Anyways, long story short, if they're not providing liquidity on the bottom side on the bid side, so the buy side of the stock market as heavy, then they're likely not doing the same on other assets, because it all kind of ebbs and flows together. If you see a massive sell-off on the stock market, you will likely see a massive sell-off on all markets. But it's also based off how like market making and liquidity provision, those models are built around retreating on bids. If they're doing it on the big dog, they're probably doing it on the smaller coins as well, right? The same thing with like how altcoin markets function. If Bitcoin dumps, then it's likely that the altcoins are dumping as well. Because if you think about it, right, most people, when they buy something, whatever financial instrument, a lot of them just like to use the market order. This is particularly true in crypto more so than other financial instruments, but like let's take Bitcoin for example. If somebody has decided that they're going to buy Bitcoin, a lot of the time, particularly if there's deep enough liquidity, that they're just going to press the market order. They want to buy it now, they're going to buy it now, versus just kind of resting in the books. So that makes us at the mercy, because everybody is that exuberant and behaves this way. At least the vast majority of people behave this way. The overall market is sort of in the hands of people who aren't that way, and providing liquidity on both sides of the market. So, if the VIX is dumping or volatility is high, then it's likely that you'll see like these bid orders on Bitcoin not necessarily get more shallow, but they'll be more likely to retreat. Sometimes they'll get more shallow as well. But like, when you have these kind of big dogs that step in and just set the icebergs heavy, these guys kind of have an immense amount of control on the market, right? Versus, no offense to somebody like Saylor, but Saylor's just going to be buying in whenever he gets his hands on more fiat. You need people who are more patient, who are willing to sit and wait for lower prices to actually catch it and save it. And so, like I said, that leaves the market at the mercy of those who are willing to be more patient. And it leaves people who are not willing to be more patient a little bit more exposed to bigger drawdowns. Is there anything left on bullish on Biddy? So the things that would lead towards a bullish argument on Bitcoin would likely just be the fact that the S&P was geared to take a nosedive when you look at the structure, and it didn't. So that's obviously bullish for the more alpha side of the market. So that's, and I've said this in the previous months, and I've also commented about this on altcoins as well. You never really want to be in a position where you're reliant on bigger market caps you're reliant on bigger market caps to provide sort of like a bullish sentiment for the smaller market caps. You'd rather be in a situation where you didn't need the S&P to keep pumping. Like Bitcoin's at a spot now where it kind of needs the S&P to keep pumping. There's been other scenarios this year where Bitcoin wasn't really in a spot where it needed the S&P to keep pumping. But now that it's in that sort of arena, it's dangerous. It's the same thing I talked about with alts before the flash crash in October. alt's structure got damaged, and they were reliant on Bitcoin to maintain bullish market sentiment. And the second Bitcoin didn't do that, and Bitcoin also saw some dumps come in, the alts just, you know, got slaughtered. And so now we're that same relationship where the alts needed Bitcoin to carry them. We're in that same dynamic, except this time Bitcoin needs S&P to carry it. So if the S&P goes and rallies to new all-time highs, then Bitcoin's going to be good. Well, good for the time being. But if it doesn't, and the S&P goes for another leg down, Bitcoin is going to get absolutely smashed. I don't know if that made sense to some of you, but that's how I'm looking at it right now for Biddy. Until we build more structure and spend more time building good structure. The structure we've built so far is good, but it's local structure. It's for the last, 5 days. If this was a high time frame chart, like say this was a year's worth of data instead of a week's worth of data, then I would be more inclined to believe that we've got some strength here. But we do have some strength, I should say, on the, but it's only a week's worth of data. So I'm a little bit less confident that, it's going to have the legs to go the distance until the market starts to prove it to me. If the market starts to prove it to me and we start to build that higher time frame structure and that looks good, then I can be, more bullish on it. But if I'm being completely objective, that's how I have to see it. It needs to prove it to me over time. It's a good start, right? It's a good start, but a good start is not indicative of a good finish. Anyways, I spent too much time talking about the stock market here, but I just thought it was important because, like I said, Bitcoin's sort of in the hands of bigger market sentiments. Gold's doing great, though. So gold fluidity was beautiful. I mean, you really can't ask for better fluidity on gold. This is a fantastic recovery after a wave of volatility slams the market. Wave of volatility slams the market, you're going to have a lot of the times that aftershock, right, of people still being scared, or maybe not scared enough to sell, but maybe scared enough not to add on to any buys or anything like that. So that could take away a lot of the demand pressure on the market. So gold looks great. I mean, we saw an imbalance of supply and demand. That's fine and dandy as long as we see good fluidity on the bottom side of the market. So this chart's a little bit messy now, but what I'm looking for here is what happened here. And on the local now, too. The local was even more beautiful, to be honest with you. The local, you had pretty clean test of it. It got a little cheeky, but we also did get a front run of liquidity. So that makes sense, right? Basically, when you're looking at where previous longs got smoked, there's two areas, right? Well, this one never got the test on it, but the one above it almost got the test on it. But it was a front run, and when you get a front run of liquidity like that, it means that the next time you go for it, you're going to likely dive into the liquidity. So what that means is this was the area to look for. Some people went long and bid the market up before we got the proper test of it. It's likely that these people that are aggressively bidding it have aggressive invalidations as well. So they front run it, they buy it before it's time to buy it because they're trying to get the best price. And it's likely that their invalidations were resting here. So the next time we go for it, it means that we're going to deep dive into it. Instead of just having a perfect wick off of it, it's because of what happened here. And then once that holds, you look for the fluidity on the higher time frame and the local, and both of those checked out pretty nicely. So that's a good sign for gold. Now where we're at right now makes sense, right? Because it's the same thing on the other side. The same thing on the other side. You're just looking for the structure, and here's another example of a front run on the sell side. So what does that mean? It means that if we can get up here, we'll likely dive into liquidity. See how there are invalidations because the price didn't touch this line. It's more likely that the next time we go up to try and test that line, we're going to dive into the liquidity because of the invalidations from the front runners. So it means something like this for a hedge. You'd actually expect it to dive into it like this before the hedge works out. And that's a good sign in this scenario because it's the difference in these two scenarios. Let me see if I can explain this. Sorry, give me a second. Okay, so you see how there was two lows here, right? We never tested the bottom low. We went for this low. We did have a dive into liquidity, similar to what we'd be expecting up here, but the difference is, based off the relative volatility, I wouldn't consider these equal lows. So the dynamic between these two lows, I wouldn't consider them equal. Now, if we see equal highs, that's a different ballgame. So if we see this sort of scenario play out where we dive into the liquidity, then we should see equal highs. And what that is technically bullish. The next spot to hold after that would be the same area here. It'd be right here. And then if this is held, then likely gold goes to make another all-time high. Because you have the same thing up here too, right? Equal highs again. So you have short sellers with the same invalidations. Whoops. I don't like to do A to B to C to D type thing. Like, this is already speculating a lot, but you know, maybe I'm not streaming at the time that this is happening. So if I see something like this play out, it looks beautiful to go rally to another all-time high. Keep in mind though, gold's not as much at the mercy of the S&P 500 because gold structure on its own looks solid. Can't say the same about Bitcoin, unfortunately, at least right now. But gold on its own looks strong. So while it's not at the mercy of the S&P 500, if the S&P 500 does, say, dump 3% in one day, that's enough volatility to have ramifications on the gold market as well. So while it's not reliant on the S&P could still throw a wrench into the price action because of how liquidity provision might retreat on the bid side of the books for gold in the event that the S&P crashes. Check general chat. What'd you put in general? Yeah, this is true, Traxy, but I also think that with the rise of, say, Wintermute and other big market makers, the relationship between the S&P and Bitcoin has been more coupled than it was, 3-4 years ago. I'm not saying you're wrong about that, because I might sound bullish to some, and I might sound bearish to others. You just have to, hear what I'm like. If you are very bearish on something, and I give some examples on why it might be bullish, all you're gonna hear is that I'm bullish, right? I'm not necessarily super bullish, but I'm just pointing out what the silver lining on the bottom side is, and then what the risks are on the top side as well, because they both exist at all times, right? 89K did fail. Like I said earlier, when you're with the situation that Bitcoin's in, when it's reliant on the positive bullish market sentiment from the S&P 500, that's already in a defensive position. That's already in a bad spot. But my opinion can change here. On Bitcoin high time frame, I need to see structure develop, because I don't know, Traxy, this isn't an equal low, right? If this isn't an equal low, and we've caught it in the void before forming an equal low with this, then with enough data and it starts to look stronger, then I can be more bullish on it. So I need to see more action and data develop into the void. As far as the low time frame, it looks good, but it's just a low time frame. So the low time frame looking good, while high time frame still looks bad. Obviously the bigger trend can overwhelm the smaller trend for sure. But yeah, that was an update on gold. Gold looks good so far. So for gold, what you don't want to see happen is you don't want to retest these. This is already done. You don't want to come back down here. So sort of the 4,020 to the 4,032, if you return to these levels, the structure could break. So we could dip into this void a bit, but you really don't want to be getting anywhere close to these again. And if you can manage that, then you'll get a new all-time high. Because this whole structure would start to crack. Retesting this means that you could go for a low lower than this low. So you don't want to do that. Okay, silver. Silver was looking more clean than Then gold, it hasn't as much because of the volatility that we saw it come in. Obviously, silver is still kind of seen as a little bit more riskier than gold. Almost like gold's altcoin to Bitcoin, Ethereum, gold, silver type of relationship. Usually if Bitcoin's dumping, Ethereum's dumping even more. And same thing can be said about gold and silver. But it still looks good. I mean, it's good enough. You have good structure on gold, which is a great sign. This got pretty messy. It didn't technically crack any structures, but the new structures that it's built aren't super strong. Told you guys, if you were here, this was the last spot to hedge on silver. So I don't really see another opportunity to hedge on silver unless you try and get really cheeky with it, which the probabilities of that are quite low. So silver and gold both look great here. The only thing that throws a wrench in it is Bitcoin, I'm sorry, S&P dumping. But they both look fine on their own. Structurally speaking, gold looks a little bit better, but silver still looks fine. Alright, we had a little bit of a dump on the dollar that came in, but the plan is still the same on the dollar. You guys were here, I told you we might see a little kick up on the euro, but I'd be aggressive with taking profits if you're longing the euro in this spot, and as a result the market has proved it yet again. So a little bit of a dump here on the dollar, not a big concern. I'm still looking at above 102, which I know is controversial. Most people are talking about how other currencies are a better pick right now, and that might be true, but I don't think right now. I can't time the market, but once we get above 102, then I'll be able to give you a better idea of, you know, maybe the dollar is as weak as people are saying, but as purely from price action and purely looking at the structure of the price, it still looks bullish to me until that happens. Oil. I'm not going to go through oil too much, but this thing looks like, I mean, it could break down pretty bad, guys. I know these arrows say, you know, it's basically pointing towards a higher rally, but if you listen to the context behind the arrows and how I've described it, high time frame, I'm bearish on oil. These kind of pumps would only be an opportunity to add on to short sells. I don't think it's that good of a long. I've said that. But maybe there's some sort of rally out of oil, but this thing looks like it's getting ready to dump quite significantly here. It might not happen immediately, but could certainly see that. Okay, so on Biddy here, we are now dipping into the local invalidations, it looks like. Let's see. Yep. So we're testing the low of it right now. So these invalidations here, this is the 1 minute on Bitcoin, right? This is the 15 minute on the right. This is the level that I'm looking at. And then the reason why the arrow sort of dives into it a bit more is because these invalidations here. So now we're tagging out these guys here that front run it. So we could go a little deep into this liquidity, but this is a pretty important spot for it to hold right now. Just a little bit lower to get the rest of the invalidations from the locals, and then got to hit the reverse on Bitcoin here soon, or we could start to challenge the hourly structures that were built for the last week. I'm gonna get a cup of coffee. I'll be right back. Perfectly rejected. Yeah, the rejection of 89 is not good. Like the SR flip of that is not good. But silver might take out the low before going for all-time high. There was a chance of that for sure. So what we're looking at right now on Biddy is the closer you get to this low, the worse, because then you could argue, you know, stacking invalidations at the lows, which is no bueno. So we could go a little bit lower on the 1 minute, but you know, because of invalidations, seeing something like this is possible. We're kind of flirting with the idea of creating equal lows here, which would be bad. So just give it a second. Let's see if there's any life here on Biddy. If not, then hold your horses. Want to see something here on the lower time frame. Hold your horses, boys. You really don't want to go much lower here. It could get bad. Put the eagle for the moon, boys. So, this is already done, right? You just don't want to go back to it. It's already done here. It's already done here. You can see we have some room to breathe. Like if we want to go a little bit lower on the 1 minute, I probably should have drew this arrow a bit deeper because we do have a little bit more room left to breathe, but it's getting real close now. Whatever you would deem as being close to this low, that's where we don't want to go. So based off the relative movements in the past. Funding check. There was some crazy funding on some of the alts, but yeah, it's pretty neutral on Biddy. It is nice to see that it's negative, right? But it's not negative by a lot. So it's a little abnormal, but not by a lot. So funding on Nance at least is a little bit negative. Same thing with OKX, but by a bit still positive. Funding doesn't matter. Most of the time it doesn't matter unless it's like really dramatic. If it's really dramatic, then it could have some sort of influence on it. But usually don't see it being super dramatic on Bitcoin these days. It's normally just on like altcoins. Like an individual altcoin might have an instance of pretty crazy funding. Like if you have like negative 3% funding, that's like unheard of. And it happens every once in a while, but... Uh-oh, Biddy. Yeah, bears just have a fucking ton of control right now. But the reason why failing what we're doing right now could... I mean, we're running out of room here to breathe. This could break the whole thing. We could get a low lower than this low, depending on what happens on these 1 minute candles. It might not happen immediately, right? But it would crack the structure. So basically what's happening right now, in my opinion, could dictate getting a low lower than 80,000. A low lower than 80,000 could knock us into a bear market. So I know I sound kind of monotone right now, but the fight that's happening right now, which it looks like the bears are winning by a landslide, could have really big ramifications on Bitcoin's future price. We're pretty much at as low as is comfortable at this point. I mean, maybe a tiny bit lower on the 1 minute is okay, but it's really fucking close now. What's up, Nail TV? Yeah, the fluidity off the rejection of 89k is pretty bad. I agree with that. And the fact that we had good fluidity on the first test of it, like it was a beautiful test of it, and then it went back to it, formed, you know, an insignificant low and still failed that while leaving behind bearish market structure is pretty bad. I agree with you guys, that's not good. Bad being bearish. I should say bearish instead of bad, because some people are really rooting for this thing to go lower. I'm sure a lot of the chat has their hedges set up, or they might even be fucking net short or naked short on this bad boy. We don't short. Along the top, you'd be surprised how many people in the chat love shorting Bitcoin. This is a big celebration time for a lot of the, like, almost half the chat, I would say, maybe even more at this, where we're at this juncture. All right, Biddy. Really don't want to retest this. Would be no bueno. You gotta hold it here and now. It's hard to hold it, like Traxy said. There's not that much, at least from a chart perspective, there's not that much stuff working for Bitcoin right now, besides the local structure, and we're challenging that as we speak. The only thing that has going for it right here is the last week of structure isn't too bad, but it could crack right now. If it's not held really fucking soon, it could crack. I'm almost telling the bears where to attack. Yeah, it's really close to being stacked. In fact, that fluidity is pretty dog water, so pretty much stacked liquidity now. Obviously a little bit lower would be like confirming it, but bears in euphoria after the last couple weeks of so what Magic's saying is the bears have been in years of pain because the chart just kept going up and to the right, and now the chart's finally going down and to the right, at least for the last month or so. Imagine being bear only. Yeah. No, I'm not only bearish. I'll try and find the silver lining if it's there, but, you know, if we crack the structure right now, it means that we could likely go under 80k. If you're good at reading structures like this, though, you'd likely agree with my argument, but maybe some are skeptical that what could happen at 86k could determine, you know, the fact that we're going under 80k. Maybe some people are more skeptical of that being, and it's fair to be skeptical because it's all probabilities anyways. Even if the structure breaks right now, it doesn't mean it's guaranteed to go lower, but the probabilities of it definitely go up for sure. So if you're very bullish in the chat, right? You think Bitcoin's gonna just go up forever. You might be right about that, but let me do this real quick. Does this change your opinion at all? Does this chart look like it's gonna go up or down, the way it's inverted? And if we go sub 80k, if we go under 80k, I really wouldn't be surprised if we see some sort of equal highs. And let me it's very bullish, triple weekly. We got Traxy to say it's bullish. Alright boys, it worked. All I had to do was invert the chart. Somebody clip it. Traxy said he's bullish. No, but we could see equal lows form. Like down here. So if it cracks through 80, then we could see actual decent rally come in from 74.5 all the way up to 76.6. But that rally, even testing down there, will create fragile structure. So like this could look good, right? If we bounce from here and we see a strong rally, that's not technically good because it's created fragile structure at the bottom here. So then it would be like devastation. That's why it's important to hold it here and now. That's already pretty fucking close to equal lows. That's pretty much equal lows if I'm being objective, but sometimes equal lows will hold and we don't have to revisit them for a while. Alright, so this arrow didn't work, obviously. We want to see if we can regain 86,666. Should have known that spooky number wasn't going to hold. But we could see it happen live right now of the Bitcoin structure cracking. I mean, the high time frame already cracked, right? But now we could even get the little recovery rally structure that we built last week to crack right here. I'm bullish, looking forward to 50k on the inverted. Just because something has been tested in the past doesn't mean that it's not important. It depends. So, like, let me see if I can draw this out and explain it. So, there's a low here, right? If it's gone through it, you could argue it's already been tested, right? But I still think that it's a valid level to see in the future. Now, if it's already been tested after it's been swept, like if it comes down and does this again, that's where the structure could crack. So something like that, the structure could crack here. Which means that if it fails this, it'll likely make a low lower than this low. And then we're kind of in free fall because there's no high time frame stuff until we get to 76,000. That's what we're doing right now, right? This wasn't a proper test, it was a front run, so that's fine, which is why the arrow was deeper into the liquidity. But, I mean, we've seen no fucking relief on the 1 minute, so this could crack, and if this cracks, then it's even a higher time frame version of it, which means we could go for low lower than this low, which would crack. The next leg would crack, and then it would go down to, it could go down all the way here. Based off what's happening right here, it could lead to this. You see your VIX chart? Where'd you send it at, Tom? In the general chat? It must have been, must have got buried. Oh, there it is. Okay, I see it. Alright, this is Tom's chart. What's weird is they're offering me Black Friday sale, but I already have TradingView Premium. Okay, yeah. But if this cracks right now, Tom, if where we're at right now on the S&P cracks and the whole thing breaks, and we could go lower than, actually we could go lower than this low. So if we get another couple days of bullish movement on the S&P, then that could lead to the next couple weeks, which Bitcoin really needs. I mean, if you get new all-time highs for the next couple weeks on the S&P, that could be what Bitcoin needs to start to build something in this void. But because of the, yeah, okay, that's a fair point, Tom. Because the previous ones have held so nicely, it's likely that that one's going to hold, right? And not only that, Tom, but you also have those equal highs now on the VIX as well. So if that does hold, oh god. If A holds, Tom, it's pretty much lights out for the markets. It's gonna get real bad. So I'm kind of rooting for it not to hold, right? XC's UI is kind of ass. Yeah, I mean, if that's what you guys want, you can definitely post it. Alright, Biddy. Still new to charting VIX. The way that you're charting it is perfect though, Tom. That's a beautiful chart. If you can master it on one financial instrument, you'll likely be able to do it on others. So if you got your chops from a commodity, a currency, or Bitcoin, you can take those chops and your skills to the VIX, and no, you've done it perfectly there. Trust me, I would tell you if you didn't. But it's a really good chart. You have picked up my approach really, really well over the years. Well, you've only been here for what, like a year and some change? Like a year and a half? You've gotten really good at looking for what I'm looking for on a chart. Oh yeah, you guys hear about Nvidia? Apparently there's some drama between Nvidia and Google. But I told you guys, we have to hold it now. If we don't hold it now on Nvidia, then, well, I mean, the chart speaks for itself, right? Either Nvidia holds it here and now, follows this path, or we go deep sea diving on Nvidia, which could bring in enough, it could bring enough volatility into the market that could cause an aftershock and send Nvidia into a deeper correction. Too fast, he's an alien. No, Tom's, I mean, if you have questions on my approach, I would definitely say Tom has a good idea of it. But it's because Tom comes to literally every single stream and tries to learn. A lot of people don't come to the stream unless there's big movement on the price, and by then what I've talked about has already come to fruition, so it's hard for me to help them get a new position. Like if Bitcoin dumps significantly right now, the viewer count will probably double, and then people will be asking me, what should we do right now? Should we long or should we short? And it's like, dude, the move's already done. Like, there might be another opportunity, but it'd be hard for me to just say that it's going to happen immediately. But yeah, Nvidia's Michael Burry has still has the short position, I believe, right? I've been talking about hedging Bitcoin more. I always talk about hedging, but I was talking about it even more so than normal these past couple weeks. If you've been around, at least in the last month, I kept hinting at it way more than normal. I don't want to just say flat out sell all your Bitcoin, right? But if I hint towards the idea of hedging your Bitcoin, this probably means that, without saying it, that there's a good chance Bitcoin's going to go down. What is the hard invalidation? I mean, just making equal lows would be no bueno, Traxy. So like even if we hold it at 74 to 76, like even if we hold it here, that could be pretty much confirmation of bear market. I mean, it's a better confirmation of bear market if we lose 74k, but even holding it there, we might get a rally all the way up to say like 109, 110, right? But then if it fails that, oh god, dude, it probably leads to this. Oh, I get what you're saying now. I see pips. So pump now or bear market? It's kind of close to that, honestly. It's kind of close to that. The thing about it, though, is usually you don't just go straight down this quickly. There's definitely instances of it happening, but sometimes there'll be like a relief rally, and that relief rally is really just to squeeze out all the short sellers, and then just continue downward. Hey man, you guys know I've always been a big supporter of Bitcoin and, you know, the pump it up music and all that stuff, but if it starts to look bad, man, it starts to look bad, right? It's not that I want it to look bad. I don't want Bitcoin to dump like crazy, but the chart is the chart. It's not about what you want. It's about, you know, what the chart, it's all about the price. The price doesn't lie. It's already got the mean reversion. I'm talking about a higher time frame mean reversion. You're a moon boy, Urban. Deep in your soul. Well, I mean, I like to lean towards optimism and abundance, for sure. Definitely more inclined to lead towards things getting better than worse, for sure. No doubt about that, but if I'm completely blind and I can only see it going up, then I'm gonna get fucked on the chart. But yeah, it's dramatic to say, but what we're seeing right now, right here and right now, could be a pretty big decision point for the future of whether or not we're in a bear market. Already, bulls are showing some weakness here, which is not good, but plenty of times, like I said, even this instance here where we saw equal lows, it could happen where it could get saved here. But what we're seeing right here and right now, this battle taking place, could have serious ramifications on the future of Bitcoin price. Like really big ramifications. Basically, if we dump here, this local structure breaks, then we go and the high time frame is pretty much guaranteed fucked at that point. And then if the high time frame structure is fucked and the low time frame structure is fucked, I mean, I don't really need to say what happens next. You can kind of assume, right? I mean, if you hold spot Bitcoin, right? If you hold like you bought Bitcoin, actual Bitcoin, and you're just holding it, there's nothing wrong with hedging against your holdings. The worst that's going to happen is you're not going to make as much money if it goes up, but you're also not going to lose as much money if it goes down. It's just protecting yourself against like this huge swings that we see in crypto relative to other financial instruments. All right. Hold it here and now, Biddy. Hold it here and now or die. Come on, Biddy. Where you at? Where are the bull whales at? Where are the whales with the bull horns on them? I'm not speaking from a sentiment perspective. Like, I want Bitcoin to pump, right? I'm speaking from what I see on the chart. Like, this is it right now. This needs to hold. And then, even if this does hold, I'm still going to be conditional on the next movements. Because the high time frame looks so bad, I agree with Traxy, the high time frame chart does look bad. The only way to fix it is to get it to look good. And how do we get it to look good? Multiple days of new data printing that shows bullish structure. We need to not only hold here and now, we also need the following days, and honestly probably weeks, to build some good ass structure that would lead me to think that it doesn't look as bad on the high time frame. So this is the first step right now, what we're doing, but it's very key to know that it's just the first step. So now, since we had such a deep test of it, if we do regain it, you can wait till it's regained it a lot, right? You don't need to chase the train, because it was such a deep test, it'll probably get, if we do get a, so let it, you don't need to chase it right now, unless you really are bullish, then you can chase it if you want, but because it was such a deep test, now we can get the under of it. So that's been done, right? So you look for the next one, which is there. So you can see something like this now. If it rejects there, then you wait for the retest of this, and then you can send it. But it doesn't take away the fact that this is equal lows. We just printed equal lows. Which, it's a low time frame equal low, so it's not the end of the world. We also have the 4 hour coming up in 15 minutes. Oh, the chat is super bearish? Yeah. No, I don't disagree with you, Traxy. The chart does look fucked, but it doesn't mean that it will always look fucked. The optimistic side right now is, if we can hold here and now, potentially make a new high, which might be asking for a lot, but if we can hold here and now, then we can wait a couple weeks to see whether or not it'll start to develop. How is that helpful? Well, if I'm not online and the structure starts to look better, but right now, obviously, the structure doesn't look good. No, it is. I'm not disagreeing. The high time frame is fucked right now. But the structure that we built the last couple days is still technically intact. It's just like what happened right here is trying to keep it intact. Yeah. Because we've certainly had instances of equal, like, you see how like the local structure here, Traxy, forms these equal lows, and it's pretty garbage. Same thing here. That's pretty bad, but it still was able to make new highs afterwards. Yeah, typically Ethereum is, I don't know if easier is the right word, but I can't think of a different word to describe it. Ethereum structures are usually a bit easier to read. Honestly, if you're ever confused on where you think Bitcoin's going to go next and it looks messy and it looks hard to read, a cheeky thing you can do is just look at ETH. Come on, Biddy. We've almost regained the devil number, 666. Don't look at ETH right now. Hey, it's fighting for the 2900. It got messy as fuck, but it did have room to breathe. It's not good fluidity, right? Like, that's not good fluidity, at least relative to the past. But it's fighting to regain that 2900 level. Like, the previous tests of fluidity on ETH were so good. But, you know, Bitcoin dumped pretty significantly, so this most recent test we've had on it, whoops, doesn't look as nice. You can see the room to breathe here on ETH was the distance between this low and this low. So we're in the void, right? The closer we get to this low, the worse it looks, obviously. But we haven't gotten close enough to it to for me to say that we've made equal lows down here. This is not equal lows. So there's still a way ETH can actually do it. But it, you know, obviously doesn't look that good. Because what you'd rather see here is, you see how we had like these perfect bounces off of it? You'd want to see the perfect bounce off of it. That shows a lot more strength. But it doesn't mean it's completely dead just yet. In fact, if we're being objective when we look at the chart, ETH actually does look a little bit better than Bitcoin. I'm not saying ETH looks good, but it looks better than Bitcoin right now. That can change, right? But now open the low time frame on ETH. I mean, it's the same. It's in the same boat as Bitcoin. The local structure isn't that bad. If we get retests of it, though, it looks worse. So you don't really want to come back down to these levels because you run the risk of breaking it. Like, honestly, the ETH chart really doesn't look as bad as Bitcoin. It's a fight for this level, 2920. Aren't those equal lows? Yes, they're equal lows, but they're low time frame equal lows. So, I mean, anytime you form an equal low, right, it's not good for the bulls. But the question of, are we going to take out those equal lows tomorrow, or are we going to go on a run first to the upside before we end up taking them out sometime in the future? That's usually what happens. The last couple years we've observed that. Now, if we take it back, let's say it's 5 years ago, I would argue that equal lows on the low time frame are nearly as bad as equal lows on the high time frame, because the old way that the charts used to move is we would always take out the liquidity before going to the next leg. But the last couple years, sometimes we won't take out the liquidity before going to the next leg. Like, you can see that on the way down on Bitcoin. We left behind, how many times did we leave behind equal highs, right? Never taking them out. Like, basically, why didn't this happen before going lower? And it's all the way up on Bitcoin. Like, this was our first instance of really seeing it happen. But there's still more instances up here where we never took out the equal highs before we went low. So the same thing can happen on the other side of the chart. Alright, this is a big hold biddy. That's true, Traxy, but people on both sides do that. Like, people in the chat call for these crazy low numbers. They're like, oh, Bitcoin's going to 9K or Bitcoin's going to 30K. Well, it might go that low, but we don't know for sure yet. We still have to take it one step at a time. All we can do is see the data we have here and now. I agree with that, right? So you're right. The data that we have right now doesn't look good. But these things change in the market all the fucking time. And yes, if the optimistic viewpoint is just, oh, we have to, maybe it'll get better, yeah, that's not a good, obviously I agree with that, that's not a good leg to stand on. Yeah, sometimes, Traxy, with taking out the low that creates the, insignificant high on a three-legged monster like that, sometimes you only take out one of the lows, you don't take out both. If it wasn't a three-legged monster, then I would, and let's say 35K was the low that created the insignificant higher high, like what we saw when Bitcoin first made a new all-time high, since the COVID rally, then I would agree with that. But it's one step at a time. First we see how 74K reacts, or sub 74, and see if anything's built there. What's up, Frosty? You scalping the NQ over there, Frosty? I'm getting another cup of coffee. Be right back. Pump Bitcoin while I'm gone. Alright, nice. You pumped it. Good job. So this would be an aggressive spot to long it. Too much coffee for Urban, we are concerned. This is the aggressive spot to long it. If you want to be more passive, and you're not really a believer in this long, wait to see what happens here, and then wait to see the retest of where we're at right now. But it's too late to short it where it's at currently, so the only play is to long it. And then look at 87.5. Where are you moving to, Frosty? If you don't mind saying. Oh, I thought you said you'll move to live in 2 weeks. Which I thought was just broken English saying you're moving to live somewhere else in 2 weeks. Oh, live, okay. Believe in something. Okay, let's see if there's any local liquidation setting up. Let's see if we got any fuel for this fire. Okay, we got some more stacking up in the same spot that I got taken out. The bears didn't learn their lesson on the first go. Yeah, Frosty is definitely in the top 0.1% of traders I don't know exactly the percentage, but Frosty's definitely one of the best from the old days. Frosty and Choco are two traders from the old days who are really good that don't use the same approach as me. I just full port. We've got some fucking killers in this chat. Because a lot of the people that are still around from the old days, like I'm talking almost a decade ago, if they're still around, then, you know, had a lot of tourists come and go. Please don't say a decade. I mean, it's true, right? Or almost a decade, what, like 8-9 years? And the thing about it is, if you got battle hardened from trading crypto, going to other assets is like, you steamroll them, dude. Because crypto volatility is so fucking dramatic relative to other financial instruments that, you know, it definitely cleans out a lot of people. What's up, women in red and rock and roll? Welcome, welcome. So I was expecting a dive into liquidity here. Obviously it went a lot deeper than I was expecting, but maybe my mistake there was underestimating the bears. But this looks fine to rally now. Pump it. So I've spoke about it in the past where, particularly when we were here on Bitcoin, this was last summer. When we went under 50K, so many new icebergs popped up down here. So a bunch of unknown demand just came out of the woodwork down here. What we're seeing now on this dump is fairly similar, but it doesn't look exactly the same. Like, you see how these icebergs are kind of layered in, right? What we saw at sub 50 is we saw a bunch of icebergs like in the same spot. Like a bunch of them just popped up right here. So it was a little bit different the way the accumulation was. So while this does look pretty strong, it's not technically as strong as it was sub 50K. What we saw sub 50K was fucking crazy. The demand that came in. Are you sure that crypto trading is harder than other instruments? I'd argue that if your risk management is dog, you're getting fucked either way. That's true, yeah. But crypto would expedite you getting fucked. Which might be a good thing, right? Because then you learn faster. Like, think about the people that long the NQ. Like, all they do is long it, right? They never short it. How, you know, that kind of exuberance has been rewarded by the fact that the NQ, for the most part, just goes up and to the right. And the drawdowns on when it does go down are not nearly as nasty as the crypto ones. I would say that trading the indices is probably, other than the fact that they're much more random in their movements, it's probably easier than trading Forex or trading crypto. Forex is pretty relatively easy because the volatility is so low, and it usually will follow good fluidity. Meaning if there's a key level on Forex on the high time frame, there's a good chance it's going to bounce off that level. Whereas in crypto, a little bit lower chance, and then the NQ actually even lower of a chance, but if you're more long biased, then you just get bailed out by the fact that the NQ just goes up and to the right over the long term. Where does gold and silver trading? I would say commodities are much more similar to foreign exchange markets. in how they function. They're pretty good fluidity. I've been thinking about this a lot lately, and this is obviously going to be bad for the middle class. But what I've been thinking about a lot is I think we might see a bull market in the commodities. We've already seen a bull market on gold and silver, right? But I'm talking about commodities in general outside of oil. Because really, when you look at commodities, I mean, the only thing that really keeps the supply side heavy on commodities is the fact that technology makes it easier to increase the supply. Yeah, I also was thinking about what you said about corn too, Tom. Corn maybe not as viable, but the reason why this is bad for the middle class is because if people thought grocery prices were expensive now, they have no idea what's coming, particularly if we have a bull market on commodities. Healthcare, maybe. We're at a point now where value picking common stocks has been getting punished so fucking hard. Like, people will do so much fundamental analysis to find the best company to buy. That's been getting punished so hard because everybody's dogpiling into the winners, like the Magnificent Seven, right? I saw a chart, I don't know how accurate it is, but it's showing that picking quote-unquote good companies based off fundamental analysis is at the worst levels it's been at since the dot-com era. Thank you, Eyes. Glad you liked it. Yeah, I'm doing like a basic intro to trading on YouTube. The channel's right there if you want to check it out. But, yeah, man, I wouldn't be surprised if we see a fucking major rally on commodities, which would... And, like, what commodities, for instance? I think that it could be so bullish that I think the tide will lift all of it. Do you use Fibonacci's? No, the only time I use Fibonacci's is when I have to. There is a risk calculator in the description, Tom. At least the last time I checked. But yeah, man, let's look at some commodities together, right? Let's look at corn. So this is the corn futures. It might give this retest now that we've formed all this bearish divergence. But, like, I don't know, corn is just, it's got equal highs, it's starting to form some good fluidity, the volume's still strong, the fact that obviously the dollar is losing purchasing power. But I think it's, honestly, a lot of these commodity charts are just stuffed downward. Like, I think they're ticking for a big move. Maybe not corn as much, but like, let's say rice or something. Look at how low the price of rice is. I think if we see rice under 9, if rice goes under 9 and it survives it, I mean, for these futures you're gonna have expiries, but if you can find CFDs without it, that'd be ideal, because this is sort of like a buy and hold type situation on rice. Like, if you do this and it holds, rice could go on a huge fucking rally. I don't know, man. Don't sleep on the commodities, because gold's leading the way right now in terms of the commodity market. Oil is a good hedge, though, right? Like, if you're bullish on a lot of commodities, oil structure looks like shit. Like, if you wanted to go long on commodities, but you wanted to balance out the risk by hedging some of the commodities, I think oil is the good hedge vehicle. Right where it's at currently, it could be pretty aggressive to short it. I think you have to wait for it to kick up again. So if you see oil at like 69 a barrel, I think that's a decent hedge play. When people say corn, I still think of Bitcoin. The Bitcoin. Yeah, Q1 is going to have to fix these charts for sure. Q1 is normally pretty good, unless obviously we're in a big time, high time frame bear market. That's beautiful for me so far. ETH just looks better than Biddy right now. Alright, S&P might go for the equal highs, but it's getting later into the day now. We'll see. You know how people say that Bitcoin and the stock market are decoupled? I don't know. Look at the charts for yourself. What do you see on these charts? Okay, they're not going to look perfectly the same, right? But, come on. You can't argue these are decoupled. If anything, it shows you that there's a lot more strength, obviously, in the stock market than Bitcoin, based off the relative pump that we've gotten so far with the stock market just going up and to the right. Yeah, markets are going to close soon on the S&P. That's correct. Not the best place to close just because the new meta of, oh, let's all fucking short the equal highs. And we're sitting at sort of a higher time frame equal high. It's better to just crack it, but, you know, legacy markets aren't 24/7, so. Maybe. Yeah, icy pips. It's possible because of this new meta that's formed across the board. It's pretty crazy. Trex, I don't know if you're still here, but isn't it wild that we've seen the equal high, equal low meta, not only in Bitcoin and crypto, but like across the fucking board? But every once in a while, certain strategies will come from the back burner and to the front. And support and resistance is mostly dog water. But every once in a while, there's a shift in the meta that it works for a certain amount of time. So it's just, you know, I pay attention to little things that change in terms of how the price behaves. And it's certainly impossible to ignore the fact that support and resistance traders are on euphoria right now. Which, for my approach, doesn't hurt my approach, but it does. I guess the way it would hurt my approach is I get less opportunities. So the opportunities are a bit more rare, but the probability of those opportunities are still pretty good. Pretty much the same as they were prior to the sort of meta shifting a bit. Yeah, they are, but Traxi, like on the way up for ETH, they didn't really sweep too many of. There's a couple instances of them sweeping the lows, but there was still, like if you look at this ETH chart here, this is a good example. So this is kind of an exception to it, but like on the way down for ETH here, you didn't take out really any of the highs before going lower. There's one right there. It's kind of hard to see, but there was a couple instances of it happening. Like you could argue it happened here, right? Taking this one out. And it happened slightly here, but there wouldn't even be, like, what happened here, this wouldn't even exist 5 years ago. What would have happened was that, and then there's some instances of it happening on the other side of ETH. Now this instance, we obviously took it out before we went higher, took it out before it went higher, but we stack lows here too. So, you know, there's instances of on the way down, we don't take out the equal highs. And the same thing can be observed on the bottom side of the market. It's just not as common on the bottom side of the market. It still happens more than it did years ago. But yeah. Way more moon boys on those lows. Do you think there's... Well, I mean, yeah, there's also this too, right? Like equal lows down here as well. But then you can go even further and say, oh, these are equal highs up here. Yeah, Near got smashed kind of harder than I wanted it to. It's still okay, but it got fucked pretty hard there. I think it'll make a recovery just based off the volume analytics, but it did get smashed pretty hard. Zcash, structure looks pretty bad now, because you're returning to an area that it shouldn't have returned to. Once you do this, you don't want to go back to it. and right now we're back at it, which means that it's likely that we'll get a low lower than this low unless the equal lows hold. Now, depending on what happens after that, there could be a chance for Zcash to recover. Once you flush out everybody and you see some sort of recovery, if it's got a lot of volume behind it, that's a good sign. And then you want to start holding the previous lows that got lost, and then you can start to build it back up. Because there's still equal highs at the top side. We're just closer to the bottom side right now. You got some shorts on Zcash at 720. Damn, you caught the fucking top there. The most recent top. Well done. This would be like the road to recovery for Zcash, but the structure is already getting kind of damaged, unfortunately. If Bitcoin looks weak, man, and Bitcoin's dumping, even if the alt looks good, it can still get fucked by the fact that Bitcoin's negative market sentiment coming in can certainly damage it. In fact, I would argue ETH has actually weathered this storm pretty well so far. Still doesn't look good, but I'm surprised on how well it's held so far. If it can hold here, yeah, we could see it happen on ETH. Praxi and Champ are both very bearish on ETH, so anytime I hint at ETH looking good at any aspect, I think they get mad. Down at 50? Yeah, that's true. But it also had a rally of, 200. So if you want to short ETH, you could look for, which has kind of already been done, but it would look something like this. Let's say we get a rally here, because this isn't the worst spot to long ETH. If we get a rally from here, then if it fails that, that's a good spot to cover the longs. Michael, aka B. What's up, bro? Because it had equal highs and reclaims, now it has none of that. No, it still has equal highs. Here and here. Yeah, I marked it out, Trexie. And then the other equal high, if you're saying it's worse because there's more data behind it, then what about this one? This one has even more data behind it. At the previous all-time highs. Yeah, but 2%, okay, that's fair, right? One of them got swept, the other one didn't get swept, right? But 2%, it's not real. Based off the relative volatility and the movements in the past, that's not really a sweep. I mean, it kind of is, but I still wouldn't constitute that as being a sweep. Okay, Traxy, what if a low has been swept by 0.1%? Is that still considered a sweep in your eyes? Because it still got swept, right? With 0.1%. Right, there's context involved, for sure. It's a good hold on ETH again. Come on, ETH. Was it Tom Lee's underwater a couple billion right now? I don't know how Tom Lee's average entry was 3,900 on ETH though. I mean, he's definitely taken a page out of Sailor's book, which is just anytime you get fiat currency, just market smash in. The thing about it though, that maybe he doesn't agree with like reading price charts and stuff, but Ethereum is really solid at following price action. Like more so than Bitcoin. I could have got him a way better average entry than 39 on ETH. You guys hear that JP Morgan has been shorting MicroStrategy? Look at that fucking chart. Brutal. I mean, that was the play amongst a lot of solo guys. Everybody was talking about long Bitcoin, short MicroStrategy as a free hedge. Jamie Dimon's the one in control now. Peril, not JP. I don't know, chat is seeming a little too bearish right now. There might be a short squeeze before we get a big dump. The chat is a bit too bearish. Yeah, but just because something is bearish on the high time frame doesn't mean it's just going to straight shot downward. It can also have rallies that get short squeezed and then continue lower. It's the same thing if something's bullish, right? It can still take out lows before it goes higher. Or take out, in this case, take out highs before going lower. %, as far as like percentage stuff, it's all relative, right? It could. I mean, that's possible, Traxy. But are you saying like right where we're at right now is a good spot to short it? Because where would you put your invalidation if you're saying right now is a good spot to short it? I'm not arguing that looking to hedge or looking to short is a bad move. I think it's a good move. But like if you were to short it right here and now, you could easily get tagged out of the short before it actually does dump. Like where we're at right now, the only play is to long it. I'm not saying it's a good long though. I'm not saying that the long looks good, it's just it's the only play right now. Once it comes up higher, then it looks better to short it. Or if you had to take a long or short right now, like you were forced, would you rather long or short? Probably long, yeah. If I had to open up a fresh trade right now, the only I mean, even if the high time frame looks like it's going to go lower, it doesn't mean that it's not going to have pumps on the way down. Like, yes, this is a 10% pump, sure, but I mean, if you look at the relative movements, 89K could reject, man. I'm not saying long it and hold it till you go to the moon. Although some people might do that and then get fucked, but... How does the order flow look? I'm just using really vanilla order flow. The liquidity is pretty thin, but it's probably due to the fact that the S&P is closing. But it's not bad. Liquidity is fairly decent. It actually looks a little bit strong on the bid side, as you can see. The only thing is the icebergs aren't really backing it as much, so we had a lot of smashing that came in. I think what we're disagreeing on, Traxy, is not the fact that it looks bad, the chart looks bad, but if you were to short it like right here and right now, where would you put your invalidation? Like, I'm not arguing that shorting it is not a good, like, it looks good to short it, just not where it's at currently, on the lower time frames. Exactly, so you wait for it to kick up more. And if it doesn't kick up more and it just goes straight shot down from here, You don't lose any money by missing out on the short. I'm not trying to bring up old wounds or anything, but just so that you get the context of what I'm trying to say is, like, you remember Cardano, right? Like, Cardano looked like garbage, but it still had a little bit of a rally before it actually took out those equal lows. I think we're in one of those similar scenarios where we'll probably see a rally up to squeeze out last second shorts and then go for those equal lows. I think it's more, we're in a more similar of a situation like that, particularly because equal lows have been, you know, being held so frequently these past couple of years. But why do we assume that? Because I'm not going to short when we're at the fucking lows. Like, this looks bad, right? But while we're down here, this is not where I'm looking to short it. Maybe here looks better, like letting it kick up more. It could have broken through, right? It could have done that. But if I do short it here, what am I going to put my invalidation up here? Or even something locally here has all been taken out. So it's not a situation where I'm saying, oh, longs look like they'll take you to the moon, but the only play right now is to long it. At least for today's trade. That's the only thing I can see right now. If it goes up higher, then it'll look better to short it. And if you're being very, very patient, then there technically wouldn't be any trade right now. If you're being very aggressive, then the only trade would be to long it. But if you're sitting on your hands, then there technically wouldn't be a trade right now. Because it does assume that it'll hold the equal lows. I agree with that. I'm just saying, if there was a gun to my head and someone was asking me, do I press the green or the red button right now for a scalp, it would likely, I'd say, only the green button looks good for a scalp right now. Doesn't mean it's going to pump. There's no guarantee that it's going to pump. There's no guarantee it's going to dump. But yeah, I mean, the chart doesn't look good. It doesn't mean that it's a slam dunk short where we're at currently. It could work out. It's just where you're going to put your invalidation. And if you did try and, like, say, short it here, or even here now, it's all been invalidated anyways. The last second shorters when this happened, they're being taken out right now as we speak. But yeah, 4 hour opened about 20 minutes ago, and we haven't really gotten that strong of a bottom wick on it. I mean, it's strong enough, I guess. Can you give an opinion on your chart? Let's see. This fucking Black Friday sale keeps popping up. This is too aggressive. This is too aggressive. Because, okay, this held. This hasn't been tested. The better one would be, yeah, this is a better one. Because it lines up with this too. So yeah, 87.7. I think that's the same area I marked out too. 87.7 looks better for the short. Yeah. Because you didn't have the local test of it too. Yeah, this looks much better. 87.8, I guess. Let me just double check this. Just anywhere in this red box looks good. This held. This one needs to hold next. Okay. Yeah, something like this for green box. That looks good. It depends on if you take it as a scalp or a swing. I see. If you take it for a scalp, there's enough risk reward to have stop at the high. But if you want to get aggressive with it, then it would be the relative highs when we're up there. And if you get aggressive with it, there's odds are that you can get, you know, tagged out a couple times before it comes to fruition. let's say you take like the midpoint of it. What you should do is put the heavier orders in the back, but let's say you take like the midpoint, right? Stop loss a little bit below the previous high, even though the fucking cheeky shit might happen. You're getting, yeah. It's not that good of a trade on a swing. It looked a little bit better when I, maybe not though. 2.3 is kind of low. Traxy, I'm not saying that shorts need to get wrecked. I'm just saying that if you were to take a trade where we're at right now in the 1 minute, you know, it just looks slightly better to long it because of where we're at relatively. Yeah, I personally don't care if short sellers get wrecked or they don't get wrecked. If they do get wrecked, then it's an opportunity to add on to hedges. For me, it's not an emotional thing. It's just a lot of people lose at the same time. I do benefit from that, but if I would get that same benefit without people having to lose at the same time, I'd take that. I'm not saying the chart is bullish, man. Visiting those equal lows, high chance it's going to go through. If we go back to here again on Bitcoin, we could go lower than 80K. Yeah, honestly, if we go back here on Bitcoin at 86.1, it could lead to a bear market. I know that sounds extreme, but I explained my thought process on it. That's why what we're seeing right here, this little battle taking place, is really important for the high time frame. What we're watching today, this movement right here, this fight is, if you break it down from low to low, and you look at the structure and the relationship between all of the structures, not holding this could lead to bear market. I know that most people who are new here probably are skeptical of my reasoning and my thought process behind that conclusion. But, I mean, I can break it down step by step if you guys want of why I believe that. We'll start from the beginning here. For the people that are skeptical that today is as paramount as it is, in my opinion. Okay, so let's start at the high time frame, right? So this is the daily chart of Bitcoin. We printed those lows at 74K, right? In April. Not only that, but they were also the previous all-time highs that we saw in 2024, right? We can all agree on that so far. It's likely that a lot of market participants, particularly the active market participants, but even more importantly, passive market participants, because, you know, when people buy Bitcoin, the vast majority of them just buy and hold. If we wake up the market participants who are in the camp of buying and holding, then we get a lot of supply that was not expected to come through. Like, supply comes out of the woodwork, right? People start selling like crazy that wouldn't normally have sold otherwise. I think that area exists underneath 74, because it doesn't matter what language you speak, right? When you look at this chart, okay, previous all-time high in early part of 2024 was 74K. We formed a range there for a long time. It's a pretty significant psychological level. I mean, you can even see it on the chart. Once we get through it, we went for a big pump. Not only that, but now you pair it with what happened in April of 2025 where we found the low. So regardless of what language you speak, this is a pretty significant level for a good portion of market participants. I mean, some market participants just buy and hold, they don't care about the chart, right? But I'm not talking about those people. Once price gets to a high enough point, the active market participants have a lot of control on where it goes next, particularly to the downside more than to the upside. Anyways, that's an important level, right? If we go under there, we're probably in bear market. And then, more recently, we had a test of fluidity. So what does that mean? It means that when we rallied to 100K on Bitcoin, we started to bounce off these lows around 90, 89K, right here. When those got flushed out, we ran the risk of entering a bear market. So when all these lows broke and you have more passive, would-be passive market participants flip to being active market participants because of fear, it could have led to that. Now the fact that it didn't lead to that, that's something that dramatic, was a good sign, right? So far. So keep with me here. So far it was a good sign. So it ended up holding, right? And then we went for another all-time high. This is what I like to call the FOMO rally. The only reason I really called it a FOMO rally so much so was because we never had a proper test of it before launching. Proper retest at this level, which is where a lot of liquidity was available for people that wanted to buy Bitcoin because a lot of people were selling at the same time. So then that becomes an area of significance to me, because that's where liquidity had a lot of conviction, and the fact that Bitcoin didn't fall off a cliff here. Okay, so then that's an area I look for, and it's basically like a war zone or a battle. A battle took place here, right? A battle took place here. So then if we revisit that same territory where the battle took place, I want to see, if I'm bullish, I want to see the bulls win that battle in a decisive fashion. Okay. And we can also look at topside stuff, like every time we went to make a new all-time high, it kind of just got rejected without doing anything significant. So looking at the other side of the market, you know, we go for an all-time high, but why wasn't it more? We go for an all-time high, but why wasn't it more? Okay, we finally got something that had more, but then the ones that followed after was the same thing, right? Why wasn't that more? Why wasn't that more? So it's showing how heavy the supply is in those areas. So now when we do get the dump that comes in, I want to see us hold this with good fluidity. We had a good go at it for about a day and a half, but eventually it broke down. So that's no bueno, because this is where the previous battle took place. Bulls ended up winning that battle. Bears have moved it back to the same territory where that battle took place, and now they've won it. So far they've won it. I mean, even if bulls win this battle, the victory wasn't very decisive. It's been a scrap so far, right? So you just look at it like this. When you see a chart, look at two opposing forces. You know, the bulls or the bears, however you want to paint the picture. You can call it what you want, sellers, buyers, whatever. When these very important moments in the chart get tested, and what is an important moment in the chart? Well, it's what other people see as important. What does the crowd see as important? Usually those areas are outliers in the data set, you know, extremities in the data set. Usually those are just areas where prices hovered around them and bounced off of them multiple times, because when someone just opens a chart, they're going to look at, okay, well, we bounced off this area a bunch of times, we bounced off this area a bunch of times, we better hold this. If we don't, then I'm going to sell. Anyways, these battles that take place, winning the battle is important, right? But winning it decisively is even more important. If you win a battle, but it's a messy fight and you barely win it, then the probability of you winning the next battle is significantly lower than if you had won the battle in a decisive fashion. So bulls might win this battle right now, but they've already shown weakness because the bears were able to get deep into enemy territory. Okay, so if we do see, you know, a reclaim of 89, then the retest of 89 for the local is what you look for. And then if we've squeezed out a lot of shorts and we start to head into bear territory, which is the other side of it, right? So this side for the bulls, this side for the bears. If we come back here and we see a rejection that's, you know, bulls push back into bear territory, but bears win that decisively, then that could lead to, you know, that. Now, if it's a messy fight on the other side, just like it's being a messy fight on this side, then it's harder to call. But at least in both scenarios, you have a long, you have a short, you don't really care where it's going next as long as it moves a lot. Now, if bulls don't even manage to win this battle that's taking place, like if they end up losing this, then the devastation. Because this whole thing breaks down, and the people that are sidelined saying, well, if it goes underneath 74k, fine, I'll sell some. A lot of those people come out of the woodwork, and all of a sudden you have a bunch of demand, a bunch of supply that comes in. So where do you think longs got squeezed after Bitcoin hit 100k? Where do you think shorts got squeezed after Bitcoin hit 100k? So shorts get squeezed here. Longs get squeezed here. After that, when we dump, why didn't we dump more? And when we pump, why didn't we pump more? So it's the battlefield, the territories have been established. And where we're at currently is we're in bull territory, and the bulls are having a hard time. Now, if the bulls do manage to win it, right, then we could go back to bear territory, and then we see what happens there. A decisive victory from the bears on the top side would lead to some probability shifting heavily into the bears' favor because there was already a non-decisive victory for the bulls, or would be in that case, which is the optimistic view. However, if we see a decisive victory for the bulls, I'm sorry, this is already an indecisive victory. Bulls are already struggling hard, right? If they do manage to win it, and we see bears struggle hard on the other side, and then we're sitting in the mid-range, then it's hard to call what'll happen next. But it doesn't really matter at that point, right? Because you have your longs, you have your shorts. So let's say we consolidate here for a while on prices, then it's going to do something major after, because everybody's invalidations are all grouped together. You know, people that long it from here and people that short it from here, over time their invalidations will tighten from trailing stop losses, manually moving the stop losses, and new positions that get opened here will all be sharing the same invalidations, which should lead to a big move after. This is assuming that bulls can win this battle, by the way. We don't know if they will yet, but this was a pretty important spot so far. They're already struggling pretty badly. I'll be honest with you. The bulls are struggling hard here. That's why a lot of people in the chat are saying the chart looks fucked, because it's already been a struggle for the bulls. If we had bounced from 89, perfectly, and actually held that, then I could be bullish. But because that didn't happen, it's been a struggle. I'm going to be a little bit more stringent on the strength of one side than the other. Okay, so we've established where these sort of bigger battles are taking place, right? This one here, we're in the bull side of a bigger battle. And then you can take it one step further. So so what I originally said was the battle that's happening right here on the 1 minute could have long-term ramifications on the price doing something like this. The reason why I say that is because, okay, this one's taking place, right? It's already messy. So then let's zoom in to see what's actually taking place. Okay, so this is a zoomed in picture of that battle that's happening. A little bit more zoomed in. So now I want to see the same thing that I saw on the other side, which is where do people say, okay, it's not going to go below there. If it goes below there, I'm going to sell. And you can see that paired with the volume that came in. And then I look at the same structure on the local, right? This one was never tested, so we're not really interested in this one currently. But it could hold down there, but... So we've seen on the local, we've seen some decisive victories, relatively decisive. Now, if you've won a battle and you return to that same place quickly, it's likely you're going to lose it. Because why have you returned to the same battlefield that you just won so decisively, so quickly? So if this breaks, it means that this likely breaks, because it's the same thing on the local. Okay, so if this breaks, it means this breaks. If this breaks, we could see this or this, which would be like the last stand for this local structure. But regardless, if this breaks, well, it would have likely went deep sea diving. And then if this whole zoomed in picture breaks, then the high time frame breaks, and then we see this. So from the top down, right? From zooming in to zooming out, we're in an important spot on the high time frame, and more recently today, in the last couple hours while I was live, we're in an important spot for the low time frame. So if you're in an important spot on the high time frame, and you're at an important spot for the low time frame, and the low time frame starts to break, then the high time frame will likely break. Keyword likely there. It's just probabilities, but that's what's most likely to happen. So there's certain moments in time on the chart where even the action on the 1 minute could have serious ramifications to the price for the next couple financial quarters. Hell, even a year. And it's more likely that certain sides will be under more important tests depending on where we are in the high time frame. The barometer on the front page of TradingView. Nah, don't worry about fear and greed index. The thing about it is it can always go lower and it can always go higher. There's no such thing as overbought or oversold. And if you're looking for the opinion from the masses, okay, like what does everybody think? You're likely going to be, you know, on the other side. You're likely going to be wrong, because most people that approach the market lose. If most people that approach the market lose, then why would you listen to most people? Yeah, I agree with that, Trexie. I'm not saying that I'm bullish on high time frame. I'm saying that there's a way that I could be if I see what I need to see. As far as low time frame is concerned, it's just the only opportunity right now was to long it from here. I'm not saying it's a good long, but that's, if I had to open a trade, the only one I could see from here on the low time frame was a long. I've agreed with you so many times that the chart looks way more fucked than it did. Not holding 89 was a big deal. The fact that we couldn't even sweep the highs after making that insignificant lower low deeper into 89 was also a pretty big deal. That doesn't look good. I agree with you. But as you know also, it's all probabilities. There's no certainty that we're going to dump, just like there's no certainty that we're going to pump. I can't say and tell everybody on the stream, oh yeah, Bitcoin's 100% going to dump, because I don't truly believe that it's 100%. Just because it looks bad doesn't mean it's guaranteed. Just like when it looks good, it's not guaranteed to pump. I need to see certain things happen in order for me to be more confident that it's going to pump. Like, the chart right now looks pretty bad, but charts change. Maybe it will, maybe it won't. I don't know. It has to prove it to me. I'm not saying it will prove it to me, but if it does, then I'll flip. But this is how you could break down most financial instruments. Figure out what the high time frame structure looks like, okay? And then once you've established that, then go lower time frame, figure out the structure there. If you're in a situation where the high time frame is under question and the low time frame is testing something under question too, then you run the risk of cracking the structure. If you crack the structure, there's a higher probability that, you know, you'll make a new low. Again, it's not guaranteed, but the probability goes up. Like when it comes to almost any chart that has a good amount of leverage in it, this is exactly how I do it. It's the same way I do it with Bitcoins, the same way I do it with the euro, the dollar, oil, gold, silver, all of it. I do it the same way. That's Traxy, that's what I said. If the chart proves it to me, then you know, I can have a different opinion on it. I'm not assuming that it's bullish. I'm not saying it's bullish, but if it proves it to me, then I'll flip. You said below 89 you would flip. Yeah, I mean, it's pretty much where we're at right now, right? We're below 89. But if it invalidates 89, I can't say it's 100% guarantee it's going to dump. And the standpoint I'm from right now is, yeah, it looks bearish, but can you short it right here and now where it's at currently? No, I'm not saying flip completely. If it regains 89, right? That means that there might be a rally that comes in. I'm not saying it's a rally that's going to take you to a new all-time high. If anything, it's a rally that'll let you add on to shorts at a higher level. I think the miscommunication is just time frame. Like I'm saying on the 1 minute it looks good to long it, right? But on the high time frame, that would just lead to an opportunity to short it at a higher price or add on to shorts, depending on if you have them running or not. Okay, the hard invalidation for bear market on Bitcoin, I mean, we're already invalidating a lot right now. It already looks bad, okay? I agree with you. It looks bad. I'm not disagreeing with that. If we get anywhere close to 74, even if we bounce off of it, that's pretty much bear market. Going under it, of course, is bear market, but even bouncing from here is bear market. If we can't get above 89, then bear market. And even if we can get above 89, I'm going to be very stringent on the way back up, if there is a way back up. If we see good fluidity on the other side, then back to bear market. If we see a messy battle on the other side, then I'm more indecisive. Because messy battle on bottom side, right? Messy battle on top side, floating in the middle, kind of neutral. I think because the chart looks bad, right, Traxy? And the chart does look bearish, me saying anything bullish makes it seem like I'm not being genuine. But the point that I'm trying to say is that if you had to take a trade today, short or long, I still think it's better to long it. I'm not saying that the long that, you know, I talked about today is going to go to an all-time high. It probably won't. But it's the only play I can see right now. Long-term shorting looks pretty good, right? But short-term, like what's happening right now, is just I feel like it's too late to just dogpile into shorts. You have to wait for shorts to get squeezed, and then you can look for it. But yeah, I mean, if you get anywhere close to these lows, even if you bounce from it, it's, you know, it's pretty much sealed that Bitcoin's fate to go lower. Now, could we see a bounce from here that leads to this or something? Yeah, we could. But I mean, you formed the equal highs that you shouldn't have formed, and then eventually you could take it out. Like even bouncing here will eventually lead to this arrow. I just don't know if we have to go higher first. Yeah, and the only point I'm making, champ, is that there was a bounce, right? I'm not saying it was a solid area to buy it, right? I was obviously wrong about ETH at 2.1, but there still was a bounce. Which is why I'm saying, like, you can't just try and, like, would you open a short sell here, right? It doesn't look good on the high time frame when this happens, but this is not the area to open up a short sell. It could work, right? But how many times is equal lows held? I think you're both making different points, to be honest. And you're both right. The trade locally was a long. That doesn't make the chart bullish. Just commentating on the actionable trade most recently. Yeah, that's all I was trying to say, is that if I had to open a trade today, it would be wait for this to get flushed, wait for the regain, and then take the long. You would short it? You would short right here? But where would you put your invalidation if you're shorting it right here? Just using a local invalidation? I mean, Traxy, how many times in the last couple of years have we seen equal lows and equal highs hold? Maybe they don't hold for a while. Like, eventually maybe this just has a small bounce and then it goes down low. But if you short it here and there's like some sort of bounce and then it finally dumps, like you were right about it dumping, but you get squeezed out first. Yeah, but is your stop loss for your short gonna, how wide is your stop loss gonna be for a short? Because what if you get tagged out and then it dumps? If you're taking like, if you're putting your stop loss at the all-time high, then that would be, or at least 15, so you'd have your stop loss 15%. The distance between your short entry and your stop loss is going to be 15%. Not only would the stop loss need to be 15%, but then also you'd also need Bitcoin to dump 65% to get your profit target. I'm not saying the chart looks good, man. I agree with you. The chart looks fucked. Ferda wants me to look at Bitcoin. But like, if you did take a short at some point when I started streaming, you've already been invalidated on it most likely. Unless your stop loss is like way high. If you took a long at some point when I started streaming, then you either got fucked here or you're in profit. If you took a short, then you've been taken out. Or you're in the red right now. No, it's not about being a clown though, Traxy. It's probabilities, right? Like, it's not a guarantee either way. That's all I'm saying. I wouldn't clown you if Bitcoin went from an all-time high to here, from here. It's just, you know, the probability looks bad, like it looks bearish, but it doesn't mean it's a fucking guarantee it's gonna dump, just like if it looked good, it's not a guarantee it's gonna pump. I'm not gonna clown you for that, dude. Nobody knows, right? Nobody knows 100%. That's fine. If nobody knows 100% where it's gonna go, then you can't get mad at somebody for not knowing 100% where it's gonna go. Yeah, I mean, if we're talking about scalp trading, then yeah, today it was to long it. But, you know, there's certainly going to be opportunities if this thing keeps pumping to short it. It just depends on where we're at in the relative range. And like I said earlier, because the chart doesn't look that good on the higher time frame, it's not even that good of a long. The only trade is the long it, but it's not that good of one because I'm agreeing that the high time frame looks kind of fucked. Moon Boys be too right about the 4-year cycle, and I'm a true believer. I mean, after the crack of 89 not showing good fluidity there, it does have me leaning a little bit more into this 4-year cycle stuff. But, I mean, I don't care about those narratives, man. I just want to see how the structure builds. Well, part of me wishes I can just be like, oh, it's 100% guaranteed to go down. It's 100% guaranteed to go up, right? But I can't do that, even if I want to. And the nice thing about Bitcoin is there's no insider fucking trading you can do. There's no earnings. It's not a company. The chart is everything in Bitcoin. So if the chart is everything, then, you know, it speaks for itself, right? Can you imagine bank managers in September 2026, people flooding to get a second mortgage to long Bitcoin? I believe it's October that the 4-year cycle, or the 1-year bear market completes, right? So yeah, you're right. Everybody trying to buy the bottom of Bitcoin in September. I don't think it's beef. I'm not mad at Trax or anything. I don't think they're mad at me. I think it's just a miscommunication of the only play I saw today was to long it, and I mean, the price went up, right? It wasn't a good long because the high time frame looks fucked, but that was the only play. I'm not saying the long that you got today is going to take you to a new all-time high. Yeah, Mario, there's some OGs that were exiting for sure. I'd imagine that the OG whale from 2010, he's probably seen the 4-year cycles happen so many times that he's like, alright, it's gonna happen. Gotta sell it. I'm not missing out this time. I mean, yeah, there's a lot of explanations, but the reality of the situation is it's in the chart, right? I know that I was optimistic, right? I try and maybe at my own fault that I try and remain too optimistic. But if you're here on the stream when this happened, you can go look at the recording. It's still saved. Right here is where the structure broke. This right here is where the structure broke. And yes, when we were going down, I was like, come on, there's a chance we can Hail Mary this bad boy. There's a chance we can fix it. But I did tell you guys, the structure broke right there. The result was just devastation. I'm not going to go through explaining exactly how I knew the structure broke right here. But there's recordings where I talk about it in detail, about why this was important. It has to do with everything over here. Everything on this side of the chart, and what happened here, here, and then eventually what happened there. Now, I mean, this is already down a lot from where the structure broke. 30%. Now it's the same thing. The structure almost broke right here. It happened right here today, live. It almost broke. If that would have broke, then yeah, we'd go for a low lower than this low, and then when you take in all the context, we'd probably go for a low lower than fucking 74k and enter a bear market. So what happened right here, live today, in my opinion, if this didn't hold right here, then there'd be a high probability that we'd be entering bear market. Not to say that we haven't already entered it, I'm just saying that there'd be a lot less doubts in my mind that we have entered it if that broke. The reason being is because you're already building the structure, right? We didn't actually have a proper test here, which is quite unfortunate. I'd be even more confident if we did, but you held this, so you look for the next one. Okay? You hold this. If this breaks, then you're going to get a low lower than this low. If this breaks, because, you know, it's likely that if this breaks, you'll get a low lower than this low. If you get a low lower than this low, you'll likely get a low lower than this low unless there's some kind of rally here. But even if you get a rally here, you're going to be stacking all the long invalidations in the same spot, which creates fragile structure anyways. Then if you create fragile structure here, then 74k is in the question where you could get a bounce there too, but then in turn also create even more fragile structure, which would lead to eventually Bitcoin deep sea diving. Bear market, you can call it what you want, but it would, if we go under 74k, we're in deep water. It could go low. It could go really low. I don't know about 35k. I have to watch it play out and see if there's any new structures that form. I can't tell that far into the future, but I mean, yeah, we could return to 60k Bitcoin if basically if this didn't hold right here, we could have returned to 60k Bitcoin sooner than later. Maybe lower, I don't know. I'd have to see what the data comes in as it comes in. I don't like to speculate that far out though. Same thing as I don't speculate to the top side either. I don't say, oh, Bitcoin's going to 250k. The same reason why I don't say Bitcoin's going to 30k, because I don't know yet. A lot can change in the structure. No, you're good, Truxy. I wasn't taking offense to it, but the chat was like hinting at the fact that it might be beef. I don't think it's beef. I honestly, one of the best things we can do is challenge each other's opinion. That's one of the best ways you can actually show someone love. It's tough love, but it's one of the best ways you can do it. Is if you truly, disagree with them, to challenge their opinion. If you didn't love me, then you would just be saying, "Oh yeah, dude, you're right. You're right. We're going to the moon," even though I'm not saying we're going to the moon. Alright, you guys wanted the Gamba. I am, there has been a lot of predictions that have been redeemed and we haven't ran it. If you're new here, you get channel points from watching the stream. You can now use them to bet on whether you think the price is going to go through the bull target or the bear target first. It's going to be open for 1 minute right now. It's going to be at the top of your chat if you want to enter. No, honestly, Traxy, one of the biggest benefits of having this stream is to get people to disagree with me. And I don't think we're disagreeing. I think we're agreeing that the chart looks fucked. I think the part where we're disagreeing on is that maybe the probability of it dumping. Like, we both agree that the chart looks fucked. I think you think it's a higher probability that because the chart looks fucked, it's going to go down a lot. Whereas maybe I don't agree to the same number that you would agree. Like, I think you said 90%. I wouldn't say 90%. Maybe like 60-ish%, depending on what happens in the near future. So that's probably where we're disagreeing, is you're more on the 90% it's going to go down. I'm more on like maybe 60%, and it could go higher than 60 if certain things transpire. If we're not able to regain 89k, then I'm at like 70-80% that we're going to dump. If we can't reclaim 89k, then yeah, like 70-80% for me is, I think that we're in a bear market. All right, let's see. Is the prediction closed? Holy shit, we got a lot of people betting today. 350k in the pool. 68% of the points are on the bear. But it's about split right now. More points are on the bear, but about the same amount of people are betting on each side. That's exactly how I'm viewing it, Trexie. If enough data comes in that leads me to change my opinion, then I'll change my opinion. But the fact that you and I can both be wrong, right? That's what keeps me from leaning that far into it. The fact that I can be wrong means that I don't lean one way or the other too hard. Because if I do, then I'm never gonna, you know, be fair to both sides. I just try and be fair to both sides when I look at the chart. $10K buys. Even if you machine gun it with a bunch of 10K buys, it's not going to move it that much. So now we look at the other side, right? So we look here. Okay, that's been done locally. We could still get a retest since it was local. And then you look for the next one after. It's right here. If it fails, if it looks like this, right, in the next couple hours, that could be bad news for Biddy. If the Bulls manage to get through here, then they live to see another day. If they can't manage to get through here, then, you know, we could see lower than 74K on Bitcoin. Yeah, I don't know. I don't concern myself too much with the whole cycle thing. It might be right. I don't know, but I just always lean on the price to tell me where it's gonna go. The price just always tells the truth. You could do that top kick, but anytime you make an equal low, you've built fragile structure. Basically, if there's a battle happening, right? If one side can go to pretty much all the way up into enemy lines, like not behind enemy lines, but right up next to it, they can advance that far. Even if they lose after they've advanced that far, it shows that they were able to advance that far. So they get really close to enemy lines. And they end up losing that. Well, yeah, they lost it, but how fucking close did they get to overrunning everything? And then the next time that takes place, there's a chance that they will be able to go past enemy lines. Like, you would need significant evidence that the side that barely survived is now starting to dominate. It just makes me, like, when I say I'm more stringent or more conditional or anything like that on when Bitcoin's pumping, like every time I see a pump, it's because the bulls were already pushed hard. The bulls showed weakness. So now I need to not only see strength, but I need to see a lot of strength from the bulls in order for me to be convinced that that weakness that they showed earlier is less likely to lead to something that, you know, deeper. You're just watching two armies advance on one side and the other, right? Bulls advance, then bears advance to the other side, then bulls advance to this side, and then bears advance to this side. And then you're watching the previous battles that took place and gauging based off that what's more likely to happen when the next battle takes place. That's all it is. And you're watching two armies battle, and you're betting on which army is going to win the battle. And the chart is just a history of all the different battles that took place, and then you can use that to gauge what's going to happen, what's more likely to happen in the next battle. And if I think one side is going to win a battle, but I'm not confident that they're going to win it decisively, I might not even take the trade. It's the same example for today. Like, the only play was to long, but it wasn't like it's not a confident long. Classic prediction bet destroying Bitcoin. Skinner needs his channel points. And like that war analogy that I used. Oh, someone redeemed a. Shazam, can you just put anything in the chat so it's easier for me to gift it to you? But that analogy, the war analogy I used, is applicable to almost any chart. It's more applicable to charts that have that have a lot of leverage, that have short selling. Oh, you're redeeming the sub to Big T to Traxy? Okay. How long does it take to get 50k channel points, by the way? Do not redeem it! Oh my god, this is bugging out my Streamlabs. I think the gift came through, right? But now there's a fucking... Now my chat's all bugged. There we go. Jesus Christ. I pay for fucking Streamlabs and it's bugging my stream. Just go to vanilla OBS, I guess. Okay, so let me draw it like this, right? So the chart here starts with, let's say, bulls winning a battle. And then bears win a battle. Okay? If we return to the same area, like if we go this low, that shows that, okay, the bulls won the battle again, but they barely did. Enemies got it to this, pretty much almost behind enemy lines. And then, if we see something like this take place, that's, I mean, what's stronger, right? A rally from here or a rally from here? What shows more strength? This, let's call this 1, let's call this 2. What shows more strength, 1 or 2? Yeah, it's 1, right? Because why, if it was so bullish and there was so much demand and the bulls had so much control, then why did we need to go all the way down to the previous lows before it was held? And then you also look at, okay, well, not only that, but what about invalidations? What about leverage market participants? If they had long this, right, then by the time that 2 happens, they've been invalidated on all their longs in the middle of the range. The only longs that will remain at that point is at the lows. So then new people who are longing it right here are going to be sharing those same invalidations. So not only does it show weakness in the chart, but now you also have invalidations in the same spot. It doesn't mean it's guaranteed to go through it though. How many times have we made equal lows and then the price does that? It's just a probability. It's not a guarantee. But if it does go through it, then we want to see what happens afterwards. Because what could happen afterwards is this. If this happens afterwards, then there's no opportunity. But if this happens afterwards, then there's potential opportunity. Because why, when everybody was selling, did the price not go down further? You can see it on the other side too. So on the other side, if it's so bearish, then why did we make equal highs? And then if it does crack the equal highs, you ask yourself, why didn't it go higher? And if it didn't, then you look for the short. This example right here, you can use this on a lot of different things. This is what I use for oil, this is what I use for gold, for silver, not just crypto. Because a chart is just people pressing red and green button. It's just a big crowd of people pressing different buttons. Red or green. People want to overcomplicate it and stuff. And you know, algos and quants want to use X, Y, Z, every formula under the sun in statistics to try and make reason out of the movements. But it's very hard to read crowd human movements. Humans in a crowd are very unpredictable. But if you try and actually see, you know, what makes the crowd move one way, what makes the crowd move another way, just based off of at what point are a lot of people going to give up, that's way more advantageous. You know, like a trading bot, right? Will work for, if it's really good, it could work for a while, but it's not going to work forever. No trading bot out there that just works forever. It has to be tweaked. And the Bulls, or the Bears on the bet celebrated a bit early. The Bulls are trying to mount a comeback. And certain strategies don't become obsolete, they just go on the back burner. Like, think about support and resistance, right? How often have we clowned on support and resistance traders throughout the years? It's because their strategy was on the back burner. It's starting to show itself again now. Supply and demand zone traders, you know, support resistance. Like, that shit was getting tossed left and right, sliced and diced for years. And now it's starting to have a little bit of a resurgence. And who knows how long that will last, but at some point it will go back on the back burner. It will go back to being sliced and diced. You just have to tweak your strategy over time. You always have to keep improving. And once you've seen enough things go from the back burner to the front, you're really quick at picking up what's going on. If you accept the fact that no strategy goes obsolete, then you have to keep it in the back of your head for the time that it's that strategy's season. But the best thing you can do is just to watch the price action on a naked chart. You know, maybe put a line on the chart every once in a while, but watching the naked price action is the fastest way. Outside of losing trades is the fastest way to learn. And like, when you and I look at a chart like this, we might see different things. I know it seems simple, right? It's just candlesticks moving up and down. That's all it is. It's just candlesticks. But there's so much information that you can derive from something so simple. It just depends on how you look at it. Like, we might see different things when we look at this. And I've showed you guys a million times what I see when I look at charts like this. Like, what I'm looking for, what I see, what I think is more likely to happen. You just have to show up to the stream every once in a while and you can start picking up some stuff. Some people just come in here because they want to know whether I think it's going to go up or down. MicroStrategy 200 options. Up or down, what's the stop loss? Yeah, MicroStrategy is getting fucking dusted right now, dude. MicroStrategy really needs Bitcoin to pump, or it's going to be bleeding hard. It definitely seems like the institutional guys really don't like MicroStrategy. It's like they don't like Bitcoin, so they're going to use MicroStrategy as a way to bet against Bitcoin. Taylor's in a war right now against pretty much all the old school institutional guys. I mean, there's a lot of fair arguments that come, you know, speaking against Bitcoin. There's arguments for and against, right? Just understand both sides. Why do people argue for Bitcoin? Why do people argue against it? And who's right? Honestly, it doesn't even matter who's right. Because if you're a trader, you shouldn't care. You just trade the chart. If it dumps, you short it. If it pumps, you long it. Or actually the inverse of that, but you get the point. Michael Saylor's here. What's up, Sailor? I feel like if I start going through the arguments for why Bitcoin's good and why Bitcoin's bad, the chat is going to start fucking rioting. Because here's the thing, right? If I went through both the arguments of why Bitcoin's good and why Bitcoin's bad, you would only hear what you don't want to hear. Just say, how do I explain that? If, say you think Bitcoin's bad and you want it to go down. Then when I explain that the reasons why Bitcoin's good, and then I explain the reasons why Bitcoin's bad, all you're going to hear is my explanation on why Bitcoin's good. And you're going to find that to disagree with. Because it's confirmation bias, right? Basically, you're only going to hear what you don't want to hear. Because it goes against what you believe. This is why rage baiting and that kind of stuff on the internet is so effective. How many people have gotten really famous on the internet by just saying controversial stuff? It's almost a formula for success on the internet now. If you want to become an influencer on the internet, just say stuff that people will disagree with. Athena Satoshi P. Diddy killed Tupac. Guys, why do you think this 6'7" meme got so popular? Because it's a fucking rage bait. It's not funny. It's funny when people rage at the fact that it's not funny. It just shows how fucking brain rot society has become. And I'm not a pessimist in thinking, oh, society's getting more stupid in the long run. I think society's getting smarter in the long run, but there's certainly ups and downs. The overall trend of society getting smarter, I think, is still true, but there's still going to be down periods where society regresses a little bit. I mean, look at the internet, man. How much more retarded would all of us be if we didn't have the internet? And maybe the internet has made us a little bit more retarded in certain aspects. But overall, I mean, the information that all of us have learned by being on the internet is still a net positive overall, if you can manage the brain rot part of it too. Some people can't manage the brain rot part of it. They go off the deep end. Like, most of the information that you have, that you've learned, would be so much harder to learn without the internet. I mean, think about trading, man. The limited amount of data that you would have. You'd have to call in to place an order. Imagine anytime you wanted to long or short or buy something, right? You'd have to call somebody who has to call somebody who has to call somebody just so you can buy the fucking stock that you want to buy. And all the fees you have to pay for all the middlemen. Yeah, even doing like price action analysis would be way harder. Like, imagine before the candlestick, right? And you're using a bar chart or you're using a line chart trying to fucking do analysis on a price chart. And it's delayed too. It'd be so much fucking harder. It'd be nearly impossible to use technical analysis but back in the day. That's probably why I got shit on so much. Do you have a controversial opinion, Michael Saylor? I'm sure you do. Yes, hello, I'd like $1,000 a fart coin, please. Could you imagine calling up a broker and being like, alright, put me in for 10k of fart coin at this price? You guys, have you heard about the history of arbitrage? So, you know, arbitrage is just like, to put it simple, if you don't know what arbitrage is, let's say that Bitcoin's trading at, or let's say a financial instrument is trading at $100 a share on